evening, dear colleagues. As always, it's Sunday, the ForexTimes project, and I, Den Strelkov, and as always, will review the likely movement of trading instruments for the upcoming trading week. Dear colleagues, a small announcement. I once again invite you to the ForexTimes community. In fact, trading recommendations, a huge number of unique forecasts, and it is very interesting that for the upcoming trading week, as many as 8 trading instruments are considered promising. So come to the ForexTimes community and don't miss your profit. Well, let's go and let's start with the euro against the US dollar. And I immediately say that this trading instrument is not considered promising for the upcoming trading week. What? I'll try to explain now. It would seem that we are seeing from the reports of the Commodity Futures Trading Commission an increase in buyers by 284. However, dear colleagues, I can tell you that according to the histogram of the presence of participants of the Chicago Mercantile Exchange, half of the professionals buy and half sell. Therefore, we probably won't guess what to do, buy or sell. We will most likely leave it alone and we won't be working with this trading instrument in the upcoming trading week. Moreover, if we want to buy, and buying, as far as I understand, is currently a priority for us for the simple reason that we have a very good movement in wave A, then there is a corrective movement in wave B, and very much like buying wave C. So, dear colleagues, if we want to buy precisely, and why buy? Because according to the monthly option contracts, we see that the price is just now coming out of the strongest support range, and the strongest resistance level is at the top. And you see how huge the number of call option contracts with which professionals at Chicago hedge their future sales deals are at the top here. If you start counting, you can count at least several billions of dollars. And at the bottom, dear colleagues, you can see that put option contracts, on the contrary, are being withdrawn. Minus 174 million, minus 165 million, minus $612 million, minus $138 million, and so on. That is, at the top, we have a very large, sufficiently large increase, and on the downside, we see a rather significant withdrawal. We want to buy with you, but the problem is that we can't buy because the first wave does not look like an impulse at all. And for us to confidently buy with you, we need to have an impulse in wave 1, a correction in wave 2, and so on and so forth, or something like that. But at the moment, I can't say that this is an impulsive wave, rather a correction wave. Correction gets a zigzag, and what should we do? Probably consider sales, but sales should also not be considered because, after all, the increase in buyers, although they are in parity with the sellers, but still the increase in buyers has taken place, and in the global sense, we want to buy with you, not sell. Gold is absolutely promising. Why? Well, it's pretty simple. According to the Commodity Futures Trading Commission, we see a decrease in buyers by 1% and a decrease in the capitalization of the trading instrument by 8%. This suggests that most likely buyers have exited the market and took their money with them. That's point 1. And point 2, the likely formation of the initial diagonal triangle 2, 3, 4, 5, after which we expect a corrective growth, and will examine, dear colleagues, sales solely with pending orders. Why pending orders? For the simple reason that gold is very sensitive to changes in the geopolitical situation in the world, and therefore we cannot assume what may or may not happen. Therefore, if something does happen, gold can easily skyrocket. And for this reason, it is not worth trying to catch gold in the 50%, 61.8% range in the Fibonacci grid. It is better to try pending orders below the base of the correction wave or below the base of the correction. So that's the way it is. Dear colleagues, the SP 500 index is probably the most promising trading tool for the simple reason that, firstly, we see from the reports of the Commodity Futures Trading Commission a decrease in buyers by as much as 25%, and a decrease in the capitalization of the trading instrument by 3%. That's one thing. Secondly, we clearly see 2 waves, namely wave number O and corrective wave number D. It would be, of course, impossible to call this corrective wave impulsive. Consequently, after the formation of this corrective wave, the price will most likely go down. And dear colleagues, now I will show you a cluster of option contracts. Please look, these are monthly option contracts, accumulations in the range of approximately 4,200, 4,300. So if we go from monthly to weekly option contracts, we will find a very interesting pattern, namely the accumulation of the maximum open interest in put option contracts for the week is also in the range of 4,200, 4,300. This is very interesting because it doesn't happen too often. So, dear colleagues, this trading instrument, in addition to gold, can try to catch on sale in the 50%, 61.8% range according to the Fibonacci grid, or wait for the impulsive movement down, correction, and sell with deferred orders in place. For the simple reason that this trading instrument is potentially very good for making a profit. So in principle, that's all for today. We sell gold, we sell the S&P index, and we'll probably not touch the euro for now. We'll see what happens next with the instrument. And again, I invite everyone to the Forex Times community for the upcoming trading week, and maybe even for the next 2 weeks. There are 8 trading instruments from which you can potentially make a profit with direct entry levels. Please come to the community. Goodbye.